Joining us now is Paul Hickey of Bespoke Investment Group, who remains underweight technologies and sees opportunity in consumer discretionary. Paul, just a vaccine strategy question. If 2021 is the year of the COVID-19 vaccines, what does it mean for the market with such a strong run-up that it saw coming?
Well, I think what we're seeing now and what the market's been rallying is this broadening out of the rally that we've seen is in anticipation. Sorry, I couldn't get out of my mouth of the vaccines that we're seeing and some sort of return to normalcy. But I think the strategy that investors should take is a more broad approach to the market rather than just tech or the mega cap names in the FANG group. So I think investors looking in consumer discretionary, industrials, energy, materials, those sectors were all on the weak side today. And I think you're just seeing a little bit of a selling the news reaction, but it's probably not the beginning of a longer term trend here.
Is that a valuation call or is it a call on the upside that you see left in the economy, or both?
So no, I think valuations are rich right now. That's one of the cons we see in the market right now, the negatives that we see. But relative to interest rates, they're tolerable at least. So we're not saying that necessarily valuations are exceptionally attractive on an absolute basis.
No, but those sectors, I meant for energy and industrials, the ones you mentioned.
Yeah, so there, I mean, with the economy coming back, the earnings in these sectors are going to rebound coming into 2021 as the economy expands. The economic data we're seeing, even with the uptick in the number of cases that we've seen and this wave reaching really high levels, the economy is holding up relatively well. We're seeing some slackening in the data, but not really a standstill like anything near to what we saw in the spring. So I think when you do have this resiliency already and then a better environment in 2021, these sectors should benefit. As far as today is concerned, it's interesting to see, I mean, how many times can you rally on the same news? So I think this morning was a little bit of an overreaction on the positive side. And historically, December has been a good month for equities, but most people wouldn't know that as of the middle of the month, on an average basis, December's month-to-date returns are typically flat. So it's a very back-end loaded month. So I think towards the second half of this month, we'll see strength and the market close off on a positive note for 2020.
Shepard Smith here. Thanks for watching CNBC on YouTube.